Let's talk about trading options, more specifically, what you should be trading instead of trading options.
Did this guy just say we shouldn't be trading options? What an absolute clown.
Now, before you freak out, before you get your pitchforks and your torches, before you tell me to pry your premium from your cold dead hand, let me add a little bit of framework to this video. First of all, I'm not talking about selling premium. In fact, I'm a big fan of selling calls and selling puts because there's various well-known strategies that when you utilize this can offer both weekly and monthly income. I'm also not talking about being a degenerate. You know what I mean? Those days that you wake up feeling a little bit lucky, so you buy a 0 DTE deep out of the money option, you're swinging for the fences, looking for the grand slam, looking for that 1000+% return. Hey, not knocking on it at all. If you've seen any of my streams, you know, occasionally I like to do it. It's fun, it's gambling, but it's exactly that. It is low odds gambling, and in this video, I want to talk a little bit more about trading. However, if you're focused on progressing your trading career, methodology, strategies, basically if you're looking to make your P&L consistently go up and up and up, and you're currently using options, there might be a better alternative for you. I'm talking about trading futures. Oddly enough, in my own trading career, I was actually trading futures before I was trading options, but the way it came about was a bit strange. Back in college, I was obsessed with this idea of making my own trading system, so to make that possible, you need a lot of data. Now, obviously, I was a broke college kid and I couldn't afford stock or options data, but do you know what was free? Futures data. So I decided to become a futures trader when I knew nothing, and I mean nothing, about futures trading whatsoever. Fast forward about a decade, and now I've traded it all. Stocks, options, futures, crypto, forex, and everything else in between. And that's why I want to talk about, if you are an options trader, hey, I wish you the best of luck. I hope you're crushing it, but you should know about some of the positives of trading futures. I'm going to give you 3 main reasons why trading futures is better than trading options. And at the end, I have 3 important side notes that I just want you to be aware of in case you look into this a bit further. Number 1, there is no pattern day trading rule. If you trade on a US brokerage and you're using a margin account that's worth less than $25,000, you're only allowed to do 3 day trades, as in opening and closing within the same day every 5 days. I've talked about this ad nauseum before, but I think PDT, pattern day trading, is one of the dumbest rules in the US market. I pray that regulators look into it, because logically it doesn't make any sense that someone with more money is treated differently than someone with less money when the market is supposed to be a fair and transparent place. Why are there different rules for different people? If pattern day trading is the bane of your existence, I want you to know that futures trading has no such rule. My second reason is theta, more specifically theta decay. If you buy a call or a put, time is always working against you. Theta is the rate of decline in value of your option due to the passage of time. Theta decay is very difficult to battle, but its existence logically makes sense because with less time, that means that there's less opportunity for your underlying that's being represented in the options contract to move in your favor. To put that another way, there's a higher chance of the market moving in your favor this week rather than tomorrow alone, just because there's more time, which means there's more possibility. So if you're buying calls or buying puts, theta is always hurting you. The second you go long on a call or go long on a put, theta is slowly but surely eating away at you, and the closer you get to expiration, the value of theta decay picks up exponentially. There's no such thing as theta or theta decay when you're trading futures. Let's say there's a future, call it XYZ, you go long at 100, it goes up, comes back down to 100. At this point, you're break even, unlike when trading options, you would actually be losing value. The extra time component when you're trading options makes it pretty difficult, and it's simply something you don't have to concern yourself with when trading futures. My third major reason of why it's better to trade futures over options is because of taxes. Now, I need to be a little bit careful here because I'm not a CPA, I'm not a tax professional. In all reality, I'm not a professional of any sort, but in my own personal experience, when you're paying taxes on your gains on futures, it's less than the taxes you pay on gains from options. Now, I'm begging you to double check this. Do your own due diligence, reach out to a professional, but I would be willing to bet the information you find backs up what I'm saying, that you pay less in taxes when trading futures than you do when trading options. Now that you know the 3 major reasons why I believe trading futures is better than trading options, I want to get into 2 little side points. Number 1, the trading hours. This isn't technically true for all futures contracts, but but it is for the main ones such as the S&P 500. It trades on what's called the Globex session, as in it trades 23 hours out of the day. There's a break between 5 and 6 p.m. Eastern, and also it doesn't trade on Saturdays. My reason for bringing this up is twofold. First of all, the normal market equity hours from 9:30 to 4 p.m. Eastern doesn't necessarily work for everyone. We're in different time zones. You might be busy with your job. You might be busy with your kid. There's a whole host of reasons of why 9:30 to 4 isn't necessarily ideal for everyone. The second part is that a lot of crazy things can happen between 4 p.m. and 9:30 a.m. when the options market is closed. There could be an earnings report, economic announcements, or various global developments. My point is that you might want to get into or out of a position during those hours, but you can't because the options market is closed. However, that's not true with futures since it trades 23 hours out of the day. On the flip side, you might never sleep again. Since the market is essentially open 24/7, you might get a little bit obsessed and end up watching it a bit too much. This next point is completely personal, but I like the fact that there's less futures to trade. For example, if you're trading options and you're looking at the entire equity market, there's thousands and thousands of things you could be paying attention to, and I think it's a part of human psychology that we're always chasing the next exciting thing that everyone's talking about on Twitter and on Reddit. When it comes to futures, there's just not as many. So for me, at least personally, it allows me to be a little bit more hyper focused on one thing. I believe I have a better chance of being successful if I'm solely focused on one thing, such as the S&P 500 or crude oil, rather than a grouping of stocks and I'm interested in their equities. In the latter case, I have to know what's going on with the report, the overall market, what the CEO is saying, not saying, the public sentiment, and many other complexities. I know many retail traders don't have experience trading futures, so I think it would be pretty reasonable to have the question of how big does your account have to be to trade futures? Now, I'm not gonna lie, some futures contracts can get very expensive. At the time that I'm recording this, one Bitcoin futures contract costs over $40,000. Fortunately, that's not necessarily par for the course. You can day trade a micro S&P 500 contract for only $123. All in all, I am not against trading options. I think there's premium selling strategies that are absolutely phenomenal and can provide weekly and monthly income. I also think that sometimes trading a 0 DTE is fun if you have that degenerate gambling itch. With that being said, I do think you should look into trading futures because you don't have to worry about pattern day trading. You don't have to worry about theta decay. There are various tax advantages. And then there's other little things such as the trading hours and maybe more of a specific focus on a couple of things where you could develop an expertise. Both futures and options trading offer considerable leverage, and they can both be pulled off with an account size that won't necessarily break the bank. If I've successfully made you curious about futures trading and you want me to make some sort of intro novice level video where I talk about where to do it, how to do it, what to look for, let me know in a comment below. I'm more than happy to make it. If you enjoyed this video, don't forget to hit the like button. I'll catch you in the next one. Have a great day.